Ever notice when, a big financial player makes a move that just makes you tilt your head,
Yeah, definitely catches your eye.
right? So recently, Stephen A. Cohen's Point 72, they really upped the ante with a biotech company.
Oh, yeah. Which one?
They boosted their investment in CytomX Therapeutics, that's CTMX, from, what was it, $2.7 million.
Okay, relatively small for them.
Exactly. To a much more substantial $26 million. That's a serious vote of confidence.
It really is. And CytomX, they're in a fascinating space within oncology.
Right.
They're working on these conditionally activated biologics. The idea is they're designed to work right there, inside the tumor zone environment.
So, like, super targeted.
Pretty much. Think of it as a way to deliver the treatment very precisely, trying to minimize the hit on healthy cells.
Makes sense. So, okay, Point 72 sees something promising there, and turns out they're not alone. Seeking Alpha actually has CytomX ranked as their second top-rated biotech right now.
Oh.
Yeah, and they've got strong buy ratings coming from, like, all angles, their own analysts, Wall Street, even their quant models.
Okay, so there's a consensus building, it seems.
It looks that way. So our mission today, pretty clear. Let's dig into CytomX's financials, say, over the last few years, 2021 to 2024,
Yep.
and just see if this bigger investment and all these positive ratings, if they seem justified by the numbers. Okay, let's start by unpacking their financial stability. We've got their assets to liabilities ratio, 2021 to 24.
Right. What's it look like?
Started strong, 1.00 in 2021. Then it dipped a bit, 0.75 in 22, 0.81 in 23.
Okay, a little dip there.
Yeah, but then back up to 1.00 again in 2024. What does that trend kind of suggest?
Well, generally, that ratio, assets to liabilities, it tells you about a company's ability to cover its debts with what it owns, right?
Right.
So 1.00 means assets equal liabilities. That strong start in 2021, that's a solid base.
Okay.
The dip in 22 and 23, that could signal maybe some increasing short-term pressures, something you'd want to look into maybe.
Sure.
But getting back to 1.00 in 2024, that's definitely encouraging. Suggests improved financial footing or management.
Right. Looks like they kind of steadied the ship, financially speaking. Now, how about revenue?
Always a key one.
From 2021 to 2024, we're seeing this consistent climb. It went from $37.3 million, then $53 million, then a big jump to $101 million.
Yeah, nearly doubled there.
Yeah. And then $138 million in 2024. That's a pretty impressive upward trajectory.
It is. That consistent growth year over year, that's a major positive signal. It points to, growing demand or maybe successful execution of their strategy.
And the growth rates themselves really highlight that momentum.
Let's hear them.
Okay, 2022 growth was a healthy 42.48%. But then 2023, boom, 90.38%.
90%. Okay, that's huge.
Huge. Even 2024 stayed strong at 36.45%. The average over those 3 years is like 56.44%.
Yeah.
That massive jump in 2023, though, that really stands out. What could fuel that kind of acceleration?
Well, that kind of, near doubling,
Yeah.
that often signals a major inflection point.
Right.
Could be maybe a successful trial readout.
Yeah.
Or a big new partnership deal kicking in, or maybe a key product hitting a later stage, bringing in more milestone payments or licensing fees.
Okay, so some kind of big event probably triggered it.
Exactly. You'd really want to dig into the why behind that specific surge if you were doing deep diligence.
Gotcha. Now let's talk profitability. Always a big question mark for biotechs.
This is $1 million question, yeah. Or I guess the $1 billion question these days.
Right.
Going from those losses to basically break even in 23 and then actually positive EPS in 24, that's a huge milestone.
Why is that so critical?
It suggests their revenue growth is finally starting to outpace their costs, their operating expenses. That points towards a more mature, potentially sustainable business model.
Okay.
That's exactly the kind of progression investors want to see, moving towards profitability.
It certainly is encouraging. And that brings us to valuation. Their current price to earnings, the PE ratio, it's listed at 5.30.
530. Okay.
For anyone listening who's maybe not super familiar, the PE ratio basically tells you how much investors are willing to pay for each dollar the company earns.
Right. And generally, a lower PE might suggest a stock is, potentially undervalued.
So 5.3 seems low.
It could be seen that way, yeah.
Yeah.
Especially in biotech, where growth potential can sometimes command higher multiples. But you absolutely have to put it in context.
Right. Peers.
Exactly. Is there a reason the market is pricing it this way? Specific risks, maybe?
Yeah.
Or is it genuinely an overlooked opportunity?
Okay, and adding to this picture, the very recent results look good too. Q1 2025.
Just came out.
Yeah. EPS was $0.27. That beat the estimates by, get this, 116.43%.
Whoa. Smashed estimates.
Totally. And revenue for Q1, $50.92 million, also beat expectations by 43.36%.
Okay, so big beats on both top and bottom lines.
Yeah. These aren't just small wins. They're significant overachievements.
That's really compelling.
Yeah.
It suggests that momentum we saw building in 2024. It's not just continuing, it might even be accelerating. When a company beats by that much, it often signals really strong underlying performance. Definitely boosts confidence.
Now, maybe part of this success is tied to who they're working with.
The partnerships.
Ah.
Always important in biotech.
CytomX has deals with some major players. We're talking Amgen, Astellas, Bristol Myers Squibb,
Heavy hitters.
Regeneron, Moderna, Merck. I mean, it's a who's who.
It really is. And those collaborations, they're incredibly valuable.
Exactly. Beyond just the money.
Well, the money's important. Obviously, potential licensing fees, milestone payments down the road.
Sure.
But it's also a huge validation of their technology. When these big, established pharma companies partner with a smaller biotech,
Yeah.
it basically signals they see real potential, real innovation in their approach.
Huh.
For you, the listener, thinking about investment, these partnerships can mean future revenue, yes, but also maybe reduced development risk because they're sharing expertise.
Okay, that makes sense. Validation and maybe de-risking. And it's not just the financials in deals. They're making progress in the lab, too.
The pipeline itself, crucial.
We've seen positive initial phase 1A data from their, let me get this right, Probody T-cell engager CX-904.
Okay, CX-904.
Yeah. It's apparently showing a good safety profile so far and some encouraging signs of effectiveness in advanced pancreatic cancer.
Pancreatic cancer.
It's a tough one.
Extremely tough. And just to clarify, this Probody T-cell engager thing, it's designed to basically guide the patient's own immune system to attack the cancer cells,
Yes.
specifically at the tumor site.
Kind of like training your body's own defense forces to be more precise targeters.
Exactly. A good way to put it.
And look, getting positive early data phase 1A for something like CX-904, especially showing safety and some initial efficacy signals in a challenging cancer like pancreatic, that's a really promising development. Good results at this early stage can significantly lower the perceived risk of the whole development process, increases the odds of future success.
So, okay, let's try to put this all together. We've looked at the financials, the partnerships, the pipeline. Does it seem like Point72 stepping up its investment and those high analyst ratings? Does it seem warranted? Well, based on what we've discussed, the improving financial stability, that strong revenue growth, the clear move towards profitability.
Yeah, the positive EPS.
Right. Plus the big earnings beats recently, those really valuable partnerships, and promising early clinical data. It does paint a pretty positive picture, doesn't it?
It really does.
Based on these specific metrics, financial and developmental, the positive outlook, it does seem pretty well supported.
However,
Yeah.
and this is always the big however in this sector,
Always.
investing in biotech always carries inherent risks. You have to say that.
You absolutely do. It's a highly competitive field, tons of companies trying to make breakthroughs.
And clinical trials.
Yeah.
They can fail.
Yeah.
Unexpected results happen.
All the time. And regulatory hurdles. Getting FDA approval or approval elsewhere, it's never guaranteed. It's a long, often bumpy road from the lab to a successful drug on the market.
Yeah, and the stock prices themselves, notoriously volatile in biotech.
Oh, definitely. They can swing wildly on news trial results, regulatory decisions, even what competitors are doing.
So while the data we looked at for CytomX is encouraging, you always have to keep these broader industry dynamics, these risks in mind.